Okay, guys, I wanted to try and get this third video done here with a look at the pound to the dollar. I was trying to get the two FX spreads. We'll get some of those equities here next time we do trads. Okay, all right. So there's a couple of good things in here that I thought would be worthwhile. Now I'm going to start where I just left off with the Aussie dollar, in that you got to decide what time frame you're trading. If you're see the beautiful thing here is, it doesn't matter what you choose. you have to pick one or the other, because you can't. If you're going to try and trade the shorter term stuff, you really have to focus on that. If you're going to trade longer term stuff, well, you can still apply everything we're teaching. Certainly, this is where the Elliott Wave count gets easier to spot, but it doesn't mean that it just makes the trading easier. In fact, I'm going to show you an example here of a wave count that we set up last time we did the pound that just failed. But so first here, let's make this point initially. Again, whether we're looking at a 1 minute or a 3 day, this does not change. All right, so I'm out here on a 3 day chart right now. I'm looking at what do we got here? This is so this is an 11-year trend. All right, so swing high, swing low. All right, do you see that? Or, I mean, guys, I can't make this shit up. Right. I mean, out here at this level here on a 3 day chart, you know, to take that, to get this, right? So you want when we put in the low here, this was 08, the end of 08. So let's call this 09. You didn't get your pivot here for 5 years. Right. I mean, that's a long wait to get to a 50. 9 years, right? But you wonder why, you know, big dogs, the George Soros types of the world will wait for it and then just, you know, so how long did it take? So from 14, they got the target at 16. So that was 2 years of waiting, and it's to the tick, guys. It's just unbelievable, right? So again, a lot of times you'd be saying, man, I want to get down that 15-minute. This could just as easily be a 15-minute chart. Could be a 5-minute chart, could be a tick chart, could be a Renko chart, doesn't matter. Time frame doesn't matter, asset doesn't matter. This is the DNA of the market, which is how I've been trying to describe this. This is how swings happen. All right, so that said, let's see what we can come up with here. So I'm just putting, all right, if it's corrective, I'm always going to look first at, got some targets getting hit. I'm always first going to look here for the shift pitchfork, and I look here, we come up shy down here. So while we did get the target, right? So the algo target is hit, right? So but the median lines don't seem to quite get it. So let's take a look here. So what I'm going to do here, since we're not to the tick here. I mean, we got it, right? So your corner pocket is realized here from the corner, right? We realize the 80% here, right? We get through, but I'm looking for precision on the pivot here, like we got here, which we don't get on this larger one. All right, so I'm going to take, here, we'll just hide that one. Where are you? Let's hide you. All right, let's get that off. Okay, so now let's go down to a daily. See if we can look at it this way. All right, so here's our perfect tick. So I'm going to take that one off just so we don't clutter up the chart. Now it does, right? So this is, we had looked at this before, and this is where an Elliott count here that didn't play the way we had anticipated. Okay, so we did get this, the push down, the 2 does look like this was our 3, the 4 retraces. So let's just recreate this just as we would have traded it, right? So we go golden zone here. So the setup, while that's deep for a 4, relative to the length of the 3, the setup is so technical. It's you know, that's a trade you got to look long and hard at, right? So, but note here, this is that target down here, and we end up, well, here, let me get this out of here, right? We're gonna get there in a second. The 1, 2, 3, and the 4, despite the depth here, you know, that's a trade that you want to look at, right? Because you had to wait. So when is this low here? That's 16 to 18. So you waited 2 years to get to that golden zone. I know, guys, right? These are long-term swings, right? It takes a very different mindset. So 2 years to get into the golden zone, and then we come down here. Well, we get there in 18, and we don't pivot down here till night. So it's 18 months to wait for that. But what we end up getting is either we've got an ABC here, or we've got a truncated fifth, right? The 5 truncates, right? And I'm not so sure that's the case, but either it's an ABC that's gone down here and we're going to get something larger. So if this is an ABC and we could easily be going ABC, and then we might finish down here. So don't assume that the hard low, the multi-year low, is in here just yet. Right now, it is interesting, right, that we got the little spike down here and then all this. So note here, pivot, pivot. So the one little spike is what pushes this down to give you the make your thinking that you've got the 3 in here, but then you need that pivot to get this golden zone. So I don't know, it's interesting, right, to see how that support seems to hold it here. Now, again, I don't assume that's the low here. Right, assumptions like that are dangerous, but until we break, right, so essentially, until we break that golden zone, well, and even there, right, you got to go back to this one. Right, so now we go swing high to swing low, right? Remember what happened the last swing high to swing low at the 50, right? Let's get you dialed in here. Get you right on that, all right? So I would, all right, so note what's going to happen here, right? So what are the algorithms going to do? We've got the low down here. Okay, there's an algorithm, there's software that sold it here. Whether, right, they used this as the golden zone or this is the 50. And the fact that they're double here, I can absolutely fucking guarantee you that their software is sold there, right, from some of these major players. So they are going to stay short. They don't give a shit about this. They're going to stay short until that gets hit or this 65 gets broken. So as we've now just come down here from this pivot to this pivot, well, here we are, right back to the 50. Assumptions are dangerous, right? So swing high to swing low to the 50. Swing high to swing low, we're back to the 50. Now we got through it a little bit. All right, maybe we'll get golden zone here. All right, but just don't assume anything, right? These guys are gonna. That's what they're after. All right, so let's go. I think there was here. Let's go down to a 3 hour here. We look at this failed count here because shit. Got to show you trades that don't work out. But the good news here is you got off to a great start. You had plenty of time to reduce your risk. So if you were in this as we had last looked at it, thinking, oh, 2 to the 3. Well, first look, I got a 1, 2, 3, 4. Yeah, the drive down is a little shaky here. I guess we'll get this out of here now. But if that's 1, 2, you're thinking I've got the 3. All right, the subdivision of the 4 was not ideal because we don't get a clear, the ABC is not obvious, right? So you had to kind of work with what was there, but it was technical. So from the 2, right, we look through that pivot here, 50 to the tick, right? So again, 50s to the tick are, the market responds here in FX. So the idea that you took the short here, right, and you got, 125 and change to 120, well, let's call it 122. 3 full points, right? So the point I'm trying to suggest is here, if you're 3 points ahead here, now we're running into the center line here, and at that point, at the very least, let's think you've locked in a little profit, even if you're just at break even, right? You're going to give back 3 points. Well, you did, right? You wouldn't have kept your stop wherever it was initially. You get that far ahead. At the minimum, you'd move it to break even, right? I'd even, I might have used this pivot here because if we break that, it would be bad news. That way you're going to lock in at least, what do you get there? Almost at least 50 ticks are locked in there before. Now you come back here, now you get a little partial profit here. So, but the count, it breaks down, right? That's what I'm trying to get to. Here, you're thinking, oh, I got it. I know where I am in the count, and right, things change, right? So what do you think likely happens here? Right, you're thinking, oh, boom, there we go. I got it. All right, what do we get on this side? Golden zone. You see, that's why, I was just having this conversation with some of the guys in the day trading room. You have, right, if you were thinking, if you were wondering, are we going to get that pivot? You have to know the algos on the other side. So look what they just got here, third target, right? So it's a constant battle. So do you see what happened here? So these guys sell it at the 50. Right, they're thinking, oh, got it. Right, here we go. We're going down. Right, the trend is down, and that is the right trade to take. right? That is the trade. The Elliott count supports it. The trend supports it. I mean, here we've got a, certainly we've got a pretty significant trend change, and it's a 5. So this coming down here, you think I got it until they hit that, right? There's always an algo on the other side, right? You don't have it until you get through that. Then you're home free to get here. Well, double bottoms are pervasive in FX, right? You got to get through that. There's stops there, so that's why they're trying to get those stops to get the fuel to get down here. But that's all that happened here, right? It's always again, it doesn't matter if we're looking at a 1-minute chart or a 1-month chart. It's the exact same phenomenon. Okay, here we come. These guys come down. They run into the golden zone. These guys win it. Simple as that. Right now, there's reasons for this, right? This is not just moving randomly, right? So the, dollar sells off, right, with what's going on between the Fed and China deal and all the other things that move the market here. It's just all this, right? It's just all that happened here, right? Elliott counts are not inevitabilities. It's just a way to try and organize the market. So you got to kind of come back here and go, well, wait a minute. Does that mean I got to finish this here, or do I have to do it like this? Well, I'm not ready to go there just yet, because technically, right, look at this. Well, we haven't, but I mean, that's such a clear 5. It would be unusual for this to go 5 up and then ultimately get down here. So I think that is now less likely, but something on a larger degree, because before I'm ready to call that a 1, let's eliminate the possibility that it's an A. So right now, let's look at this here. So this count is, well, at least that part of the count is off, right? We're past that. This is also a good example here of what I was trying to show you guys, that market maker pattern where we get the zone, then we get right here, and it's often, right? So we'll look at that in a second. You get the little V spike. This is trying to bait people into getting short right at the golden zone. People who don't know any better, right? What do? They're trying to bait them into that short that don't know there's a golden zone there. Right, so up they go, and then so you get the consolidation here, right, and then there's the final break. So this is the turn. Here's the first phase, second phase. We're going up for the third phase. Do we have it? Well, we'll see. But there's the 3-day. Well, this is a little bit longer here, but this is the pattern that you'll see market makers use, and it's the same thing coming down. Right here, here's the first consolidation, second, third. It's over and over and over again. This is pervasive in FX. We're going to get into that training after the first of the year. Okay, so let's get some of this stuff off here, but just want to make that point so you can see this is a very consistent recurring pattern. Okay, let's get you off of there. Okay, so what do we have here? Well, it's hard to ignore the impulse, right? How do we ignore that? And it looks, wicking this off, looks like that's your 1. So 1, 2, 3, 4. I don't know that I'm ready to call that done. Let's just track it, right? So from the, God damn it, come here. From the new, well, that's my 1, 2. Yeah, let's use that as the 2. Get in here. So we've just hit the 38. So on the smaller degree, this looks like you got a candidate here for 1, 2, 3, maybe 4 going in. Let's get you down a degree, and let's go to green. Okay, so not ready to call that the top just yet. Maybe, yeah, of course, certainly it could be. But right now, it looks like that we're just retracing here to get ready to go up one more time. Well, look here, we've already come down, tagged the 38, and now look where the price is. So it looks like that 5 is underway, and then, kind of putting the whole thing together here. Looks like we're kind of steep for median lines, but here, I might do with trend lines here. So this is going to be the important one. So we talked about this the other day. So here's your base trend line off of the low. Right? So if we start to break down here, we've got room until we get there. So you could think of it this way, right? So this, right, if we start to break down here, you'd have space between the two trend lines, right, for a deeper retracement. So if this is going to come up one more time, right, we get the 5 up here. That's just for the sake of the discussion. There's your 5. Okay, we get a clean impulse. Right, so if this just carries on with it, if that ends up being the 4, we got a pretty steep runner here. At some point, that is likely to start retracing, and if it breaks, you've got the space to to the other trend line. Right? It's that space you have to work with here. And now you can see we're coming into, right, what's up here, right? So just draw it on over here, right? Lots of resistance that it's got to deal with here. But the count here looks pretty solid. Like we're headed up here to get that. And then final touch, right? You'd look for, length of the 1. If that's my 4, where's the 100? All right, so we can get up and get 100. So we'd have parity between the length of the 1 from the proposed 4. If we get that, man, it's just perfect. All right, so then the whole thing could start to retrace if we've got a major trend change here. Well, if that's going to come down as an ABC, if we're going to go something like that and get down in here to the wave 2 zones, that's going to get interesting. So let's just leave that. So of course we don't have this, but you might then you'd start putting it together like this, right? So we put something like that together. Maybe we don't make it that far. 50s have been very responsive. Maybe we just get a little ABC here, right? So this, right? I'd be waiting for that. Right, if that's a major trend change, but you got plenty of trading here. So the first trade you've got is right here between the trend lines for your A. Then you'd have a retrace back here from this pivot, right, coming back to the golden zone on this side. Then you'd have the short from this side heading down to that algo target, which would be right here at the 50. You see how these all, hang on a second. Sorry, I'm back. See how the whole thing, they're puzzle pieces here, and we can use these tendencies to put the trade plan together. So right now, here's the major support. So if this starts to come down, I'm looking for the A. Retrace, give me the golden zone. I'm right back here to all of this structure. So that an ideal place for the B to come down and give me the C. Now I know where I am. So there's the short into the A, the buy into the B, and the sell into the C. So this is definitely, right, we know we got plenty of vol here. I think they just had the vote. So there's all sorts of opportunity here in the pound. But you got to be on top of this. So, I mean, this needs to be, alerts all over the place here so you don't lose track of what you don't, oh shit, I was watching the S&P, right? I forget, or I was watching Bitcoin, or I was looking at Litecoin, and then all of a sudden this is happening and you're not on top of it. So it needs to be very much in your awareness if you're going to trade FX on these kind of time frames. All right. Oh shit, I went long again. All right, so I think hopefully you're picking up a few ideas here. That's kind of what I was after. All right, guys, plenty of, there's never any shortage of volatility in FX, right? So there's plenty of opportunities here, but kind of as I was suggesting with the prior video, pick your time frame and then stay there until you make a deliberate decision that if you're going to change your time frame, then adjust your trade plan accordingly. All right, guys, talk to you later.